I was a realtor since 2015. I knew the different ways to approach valuations. This was a commercial asset, so you're really looking at income. That was an eye-opening experience for me to see how quickly I could increase the value and force that appreciation. It wasn't something I necessarily learned, but it was something that when you see it and it actually hits you in the face, it's like, wow, that's real.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Matt McCurdy here on the show. Matt, welcome.
Thanks, Neil. Thanks for having me.
Say, I'm excited you're here. For the audience's sake, who are you? Where are you from? What do you do?
My name's Matt McCurdy. I'm a real estate entrepreneur is what I call myself. I have several different real estate endeavors. I obviously own rental properties, own some mobile home communities, wrote a book, do tax sale stuff, real estate broker, the list goes on and on. We don't have a long enough podcast about all of them. I live in Cedar Rapids, Iowa. So it's a great market that I really have enjoyed. And I always find that the question of where are you from a fascinating one. Most people say, hey, where did I grow up? Or have I spent the most time? What place am I at now? And I can answer two of those three are Cedar Rapids. I've been the longest and I live here currently.
Well, that's great. We got a lot to unpack. Well, then I'll ask the third question. Where'd you grow up?
I grew up in Grimes, Iowa, so just outside of Des Moines. I can't believe that I'm seeing now they're a 4A school. When I was going, it was 2A, and our senior year we transitioned to 3A. So it's seen plenty of growth there for sure.
So you graduate, you leave DCG, and where do you go after high school?
I went to the University of Iowa. Actually, first, I can't forget that I did community college. My parents were open to paying for a couple years of school, and they said DMAC was the spot. So I went to DMAC in Ankeny, did 2 years, got my AA there, and transferred over to the University of Iowa, where I got a finance degree 2 years later. Graduated in 2007.
Okay, cool. And then you leave school, and what do you pursue?
I left school that between that summer, between my junior and senior year, I got an internship with a company called Rockwell Collins. Now they're called Collins Aerospace. Yeah. That leads you to why I'm here in Cedar Rapids. Collins Aerospace brought me up there as an intern. I liked what I was doing. It had nothing to do with finance. It was a supplier management position where I managed suppliers, not as an intern, but eventually as a full-time person. I stayed on throughout the school year as my senior year, did a little part-time work for them, and eventually just rolled into a full-time job once I graduated in May.
And how long did you were with them for?
Yeah, I actually have a very succinct corporate America experience. I did 5 years of time, as I call it, at Rockwell Collins. In that same role, just kind of worked up the corporate ladder, same department, supplier management. And then I did 5 years at Whirlpool.
At Whirlpool.
In Amana. Yeah, doing similar type work, sourcing, supplier management type stuff. So obviously it's not too hard to discover how I led myself into real estate, going from a supplier management, working with suppliers, salespeople. It's not too hard to squint and say, the negotiations, contract law, how that works for working with real estate working with contractors. So
No doubt there's tremendous overlap, but there had to be a seed planted somewhere that sprouted and then goes, okay, now this is the path. This is where I'm going.
the search was for a better way. Quite honestly, if I looked back in 2011, I transitioned from one job to another, got a different taste of corporate America experience, found myself at a point where I felt like I had good footing at Whirlpool. And I'm like, there's got to be more to life besides doing this for the next 30 some years. Watching my 401k kind of go up and down, not having control over that, I started searching for something different. And I give all the credit to my girlfriend at the time, which is now my wife. She came up, found the book, which every real estate investor knows, Rich Dad, Poor Dad. And I read it. And before that, she told me, you got to read this book. I think you'll really like this. We should invest in real estate. And I was dismissive of her. And I read it 6 months later and I'm like, man, we should invest in real estate. This is a really good idea. I came up with a great idea. So she keeps me even playing for she was the idea generation. And then from there I just read more and more about it, of a few more Robert Kiyosaki books, and started taking action. And really, I developed a business plan in July of 2012 and then bought my first rental property in December of 2013, which there's plenty of lessons in that year and a half, put in plenty of offers, but I had a very set, and looking back on that now, a very conservative criteria, but nonetheless, I'm in a good spot now.
Yeah. You had no idea how good a time period that was to buy, right?
Absolutely.
Yeah.
Definitely full 2020 vision, and Monday morning quarterbacking is a thing with real estate. But you also have to be, you got to remember in 2012, it's very easy to be like, oh my gosh, listen to this. Why did that lunatic not buy more? We're only 4 years off of one of the biggest financial real estate collapses we've ever seen. So
in the history of the country.
Absolutely.
Right.
So it's okay to be a little gun shy.
Yeah. Days were pretty dark back in that time period.
Sure.
All right. So you buy your first rental and you're still on W-2.
Still working W-2. December of 2013 was a magical month. This is a common theme with me. Timing's never really my thing. So in 2013, buy our first house. Actually, let's back up. In November, unfortunately, my fiance's mother passed away. So we had that to deal with. A lot, going on. We buy the first rental single family house December 13th of 2013, renovate it, have a tenant move in January 1st. We got married January 11th of 2014. And then on honeymoon, have a tenant calling us frantically that the Orangeburg sewer is backing up into the house. And I'm organizing on our honeymoon to get Orangeburg sewer replaced.
That's the kind of situation that you remind your wife that was her idea, not yours, to buy the house, right? First.
Yeah.
But best not to do so on the honeymoon.
And maybe that's a good indication of how my makeup is and just my mindset. That did not deter me from buying more property.
Yeah.
I was hooked as soon as we bought that first one.
2014, did you buy more property that year?
We did.
How many?
2014, I think we bought 2 single family houses. Mm-hmm. Just kind of took it slow. 2015 is when we really ramped up. We actually were able to buy 4 duplexes all on the same street as a package in January of 2015. Bought a duplex actually in the Des Moines area that within a couple months, and it really started snowballing. And that's kind of what I tell new investors anytime they ask. It's usually about between 5 and 10 where you start saying, okay, now I'm seeing the fruits of my labor.
Yeah. Walk me on the other side here, the W-2 job. Walk me through that. You were there for a period of time, and just how did that end, and then the transition on?
Yeah. So I've never been this lucky in my life, quite honestly. My plan was always to leave in April of 2017. If you know the little Rolodex card where you have the calendar, I
Yeah,
had that each month, and it was kind of counting down. I would say around 20 months. I had that visibility, thinking about my financial background, my finance degree, applying that concept and forecasting out. If I continue to acquire at the rate I'm acquiring, I'll have enough cash flow to surpass or, supplement my W-2 income.
yeah,
So I knew April of 2017 was that time. And many reasons was Whirlpool did a bonus, and they did a merit raise at the end of the year. The calendar year was their fiscal year. So I knew I wanted to just stay to make sure I didn't get screwed over,
yeah,
honestly. Uh, but March of 2016, so roughly a year prior to that, they start talking about organizational structure changes and how they were going to. There was one of me in each of the U.S. plants. There's 7 U.S. plants at Whirlpool. I think to this day, there's still 7 U.S. plants. And they had one of me in each one of them. And our department was virtual, basically. They wanted to move all those positions to corporate headquarters, which is Benton Harbor, Michigan. I didn't want to move there. I didn't really see a path or future there. They wanted me to work in the plant. I don't have experience working in the plant, being a production team leader. That's not my cup of tea.
yeah,
So they forced a lot of people out, and unfortunately, I saw the really nasty side of corporate America there. A lot of people took pay cuts to leave, and it was really sad seeing some of the people with families they're supporting. Luckily, it was just my wife Steph and I at that point. But I was the last one. I was the last one holding out,
yeah,
and they finally paid me a severance to leave at the end of December of 2016 was my last day in corporate America. And to this day, I'll tell you, I even had a plan. I was ready. They paid me a severance to April, which was kind of ironic. I still got a
yeah,
bonus. It worked out perfectly for me, but it still felt raw and emotional when I got that call that I knew was coming,
yeah,
that they just didn't need my services.
yeah,
I think educationally, we're trained to be good stewards and good workers for other businesses, and eventually we'll retire. Once we're amass some kind of fortune and live off of that when we're old and gray and can't really really utilize it like we are when we're younger and in the workforce. We kind of
yeah.
get chewed up and spit out as a society.
It's a very unique world. Obviously, you saw the path, by a book that inspired you and showed you a completely different way, and then you took massive action to go down a very different direction. So you leave corporate America, or corporate America leaves you, one or the other. And what's that first year like after that? Right. So
Yeah.
it's what, 2017 at that point.
Yeah. 2017 is a weird year for me.
Yeah.
Quite honestly, I was at a, a Y intersection, as I describe it. I can stay on my path, have rental properties. I'm self-managing. I had a small enough portfolio. I think it was around 20 buildings that I could self-manage those and then just ride off into the sunset, not ever do as well as I thought I could, but be plenty successful to continue to stay out of a corporate job and be my own boss and not have as much stress, or I could start scaling up a little bit more. So 2017 was a year where I fished, I golfed, I, worked on some hobbies. I still worked on real estate, but kept myself occupied. And by 2018, I kind of ripped the Band-Aid off and said, let's go for this. And I think in 2017, I only acquired one property, but in 2018, I acquired, I think, close to 14.
Wow.
So it was a total like foot off the brake, foot on the gas
Yeah.
situation. And going back to my timing situation, in that 2018, I think 13 of those properties I bought were roughly 2 weeks before my son was born, our first child. So terrible timing again, but I'm a maniac. So that's what happened.
Well, you had some motivation knowing something was on its way.
Yeah.
Time to lay a whole bunch of groundwork.
Yeah, I guess. I don't know. I haven't really spent the time to deep dive and analyze what I was feeling or thinking. But to me, it was a great opportunity. One of the big packages was 10 single family houses, and it just hit the right time. I saw the opportunity. A lot of people were overlooking it, and I decided to go after it. And it's looking back on it, it's been a great investment, and I'm really glad I did it.
Is a sweet spot for you that 1 to 4 family?
That's a good question. I don't know if I have a sweet spot per se. My portfolio would say yes, but what I will say is it if someone analyzed my portfolio, they would say, "Matt, you're kind of scattered and you're kind of all over the place." But what I do is I do it regimented, and I take on new roles as just ways to learn and
Mm,
grow.
yeah.
So I yeah, I've had the most success because I've been in that market the longest, for sure. 1 to 4 units. The mobile home communities, I'm seeing success there too, but they were later.
Talk to me about the first mobile home community, or maybe how about this? Talk to me about the first asset that was not a 1 to 4 unit. What was it, and how'd you get turned onto it? You didn't work this hard to earn next to nothing on your money. Savings accounts barely move the needle. Tech stocks, AI stocks, well, it kind of feels like Vegas out there right now. Rentals, too oftentimes it means tenants, toilets, termites, and not the cash flow you were thinking. Well, so I've got an alternative. Little Guy Loans Co-Lending Fund. Qualified accredited investors are earning 10 to 11% annual passive returns. It's paid quarterly by co-lending with us alongside me on short-term first lien real estate loans right here in the greater Des Moines area. Your money's backed by a real property, not promises. It stays close to home. We've successfully funded well over $10 million in loans right here in central Iowa. So if you want steady income without headaches, click the link below in the show notes. Let's connect. We'll see if it's a fit for you.
I'm pretty sure it was a mobile home community.
Hmm.
I bought it in September of 2020.
Okay.
And as we all know, that was a different time.
Yeah.
Buying real estate that time, a season of COVID was a challenging time. I don't know really if it was the right thing to do or not. But what I thought about and what I kept thinking about when we were really staying at home, we were told to stay, at home. Our
Right.
government, it's hard to believe, and I feel like a lot of people are starting to forget that. But our government said, take the next 3 months off.
Right.
They
Sorry,
had-
right. They actually said take off indefinitely because there was no time frame. Right.
Yeah, we didn't know
Yeah.
how long, but eventually it was around,
Yeah. Correct.
Memorial
Yeah.
Day that things were starting to loosen up in Iowa. And it was a tough time. It was really tough because we had, thankfully, now that I'm seeing how that's affected kids in educational settings, we had a 2-3-year-old, depends on the time of year, but we were able to spend a lot of time with him. But it was still challenging because, again, I had that motivation to continue to grow and progress in a real estate fashion. How can I do that? And I just kept going back to affordability and what happens when the government continues writing checks. I don't know how for anybody this was a shock when interest rates started going up. I saw that coming, and I'm like, how are they? Quite honestly, I was shocked how long they sat
Stayed. Right.
low as they were.
Right.
Because all you had to do was see the Federal Reserve's chart, and it went hockey stick.
Correct.
Where they just started printing trillions of dollars in money. And it's like, where do you think that's going? How do you think that? I took macro, micro econ, it didn't
Pretty
take much.
basic.
Yeah,
Yeah.
it's very basic stuff. So I said, how is this going to impact me? How is it going to impact our community? How is it going to impact real estate? And I still think that to this day, we're seeing it over and over and over again. Affordability, home prices continue to soar. Uh, Wage growth isn't catching up. We're kind of in trouble as a society. So I said, how about I be part of the solution instead of part of the problem? I'm born and raised in Iowa. I'm going to invest in Iowa mobile home communities. I'm seeing plenty of institutional investors coming in, pillaging some of these mobile home communities. And I don't like it. I don't like seeing what they're doing to people that are kind of held hostage to their mobile home, because the thing that people don't know is it's roughly $8,000 to $10,000 to move a mobile home. They can't just move it because they don't have that money. They're living in a mobile home for that reason. And when you increase their lot rent by, 2 times, they have to pay it. So I wanted to be part of that solution, and obviously it's a profitable business too, but be in a way of being a good steward for it. So that was kind of my MO. And I bought one in September of 2020, and then I thought, well, this is going all right. Let me buy a bigger one. Bought a bigger one in August of 2021.
What did you learn about that business that led you into buying another one, and maybe what's distinctually different between that and owning, 1 to 4 units?
I will say mobile home. I'll answer your first question or your second question first.
Hmm.
What's distinctly different? That's very easy to answer. Mobile home communities are very cash intensive, and there's almost kind of like a good old boys network in that space. It's a very smaller space, right? Where you're seeing a lot of people that know each other throughout the state or the Midwest. We all know one another kind of situation versus single families. You could own 3 single families in Cedar Rapids and I could never know you, that kind of situation. So I would say it is very different. The clientele is different. You do have some situations where, quite frankly, I've gotten applications for mobile homes that I'm like, I don't know where you can go from here. I feel bad for some of these people. Like, I have to reject them because they're not meeting our qualification standards. But it's left me thinking, what are they going to do? I don't know where they're going to go, because I really view mobile homes as like one of the lower standard living situations, like most people do. Um, I don't know. It's tough, and you just kind of got to do what you feel is best and what you can do to help others. So, uh, anyway, the first question, remind me again.
What did you learn in between, after buying the first one that led you down the path of to buy a second one?
Yeah, the first one, I knew it all along. I was a realtor since 2015, so I knew the different ways to approach valuations. Obviously, the single families are market approach. You're comparing the house
Sales
next
comps.
door, or
Yeah.
sales comps. This was a commercial asset, so you're really looking at income and
Mhm.
expenses, right? That was kind of an eye-opening experience for me to see how quickly I could increase the value and force that appreciation.
Yeah.
Uh, I think it wasn't something I necessarily learned, but it was something that it's always when you see it and it actually hits you in the face, it's like, wow, that's real. Like, I've heard it philosophically, but this really does make a lot of sense. And that really proved valuable to just say, okay, why not try for the second one? And the second one was much bigger, and it had its challenges, and that's kind of a common theme. I'm self-aware enough to know I'm looking for continuous improvement in my life, and that was it. It just was an opportunity. I worked through it. It was, of course, a bidding war. I was told there was around 17 offers on it, and somehow I got
Wow.
so and worked through it. Tried to. I did a lot of auditing of the financials to ensure that they were correct, and we found some discrepancies, and it just it worked out. So I wasn't necessarily forcing and didn't have it as a goal. Hey, I got to buy another one of
Yeah.
these. Just was, hey, I'm keeping my options open, and here's one that might work, and it happened.
Have you bought in other asset classes other than housing?
So I have a commercial building that I bought in that 2008 teen buying frenzy.
Yeah.
Was a small commercial building, a janitorial supply company in that. And then eventually I said, it is just a little 1,000 square foot building. Eventually I was like, maybe I can convert that, because quite honestly, the commercial side of things has lagged after COVID. It's been tougher. I'm like, why am I just letting that sit? I think I converted it into residential. So I have done that.
Yeah.
And in Cedar Rapids, we're seeing 2 data centers go up. So there is need for rentals for
Wow.
sure.
Yeah.
So we're experiencing a pretty good boom right now with skilled labor coming into our community.
Yeah.
And the more housing we can find, the better, I think. So that was my decision there, and it rented out pretty quick once that was converted. I've built a storage building on the second mobile home community,
Yeah.
and yeah, that's a whole nother podcast story. Butting heads with the city. I'm out in the middle of cornfields in this park, but they have decided that it needs zoned totally different, and they wanted me to jump through hoops. So they said to build it, I only could rent it to people that are on site that live in that community. I couldn't ask other people outside of that community to rent spaces. So it is seen mixed reviews, as I would say.
For a for self-storage facility of what size?
It's only 24 units.
For a
And
measly 24 unit
yeah,
storage facility.
yeah, we're busting my brass for that. Yeah, it's been something, but that's small town Iowa. Some communities are great to work with, and some of them they can't get out of their own way.
Yeah. All right. So speaking of cornfields, you wrote a book, and I think I think the parallel to the title of the book is timely. So
Yeah.
tell me about that.
Yeah, it's called Cornfed Millionaire. The subtitle is The Guide to Building Multi-Million-Dollar Wealth Through 1 to 4 Unit Real Estate Investing in the Midwest. Wrote it, published it right before Thanksgiving of 2025, and have seen, good reviews from people. The original intent is just to have a legacy piece for my son. He's 7. I don't know if he's interested in real estate. He's interested in what dad's doing. He's interested in what mom's doing, right? Just modeling our behaviors.
Yeah.
And I feel like I would have left a stone unturned if I just didn't do something like this. I throw out some futuristic things within the book, talking about affordability. Where is affordability going? I see the East and West Coast and the Sun Belt, the Southeast is all on fire, right? Everybody is buying property. Prices continue to surge. And now we're seeing some of that come back down to reality. People are running out of money. And what I don't hear a lot of people talking about is the Midwest.
Right.
And we're still affordable somewhat, depends on your definition of affordability.
Right.
But we're not cheap as compared to as we were a decade ago, but we are certainly still more affordable than most places. And quite frankly, that is one reason why I'm still in Iowa. It just has never made sense to leave. So it's got 15 chapters of it. I decided to write a book, obviously for my son, and I wanted to give techniques, tips, strategies on how to invest in the 1 to 4 unit space, but also once you have something, what can you do to force appreciation? And then just some mindset stuff that I don't think a lot of people talk about that really is critical. to being successful in real estate investing. Comparing the first time investor that just kind of gets stuck with 1 to 2, most investors in this country own 5 units or less.
Correct.
And they just spin their wheels. So that was a driving force too. How can I help some of those people? So hopefully some of that lands with some people.
If you're a house flipper, execute the burst strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
How about this? Top 3 tips for an investor to break out of that, sub 5 unit, holding portfolio and to catapult their way through it.
Yeah, that is a really good question. Number one, I would say, is treat it like a business. I don't see a lot of people, they say, oh, I'll buy a property here, I'll buy a property there. Oh, now I just got, terrible tenants and they trash my place. Oh, this has been terrible. And I talk about that. That's actually music to my ears because that's eliminating some of the competition.
Right.
Quite frankly. But the part about making it a business is creating a business plan. Why are people not making business plans? I 10 years of corporate America experience, I can tell you they are not lackadaisical about having a plan. And so many people kind of shoot, aim, fire situation, and that is dangerous. So treat it like a business. I always tell every investor, create a business plan, because if nothing else, it's going to keep you sane. It's going to keep you from making bad choices in investments, but it also adds credibility when you're talking to a bank that says, how many banks get new investors saying, oh yeah, I want to buy my first investment property. How often they get that? Probably every week they get a few, I would guess.
Matt, I run a hard money lending business. I can tell you how often we get it.
There we go. Let's hear from you.
Yeah, you're right. A lot, you bet.
So how much credibility would that give if somebody's coming to you with hard money lending saying, hey, I got a business plan too. You want to see it? This is what I thought through. And now that we have AI, obviously don't just plagiarize what AI is saying, go through it and then tweak it to make it yours. But there's no excuses. You can have a business plan, a well thought out business plan done in a day. So that's my number one foundational thing. I always tell people, do that. You'll thank me later. And oh, by the way, don't just sit on it and not revisit it, because in 5 years, you're going to be amazed on the things you've accomplished. I still am amazed. I limited myself of what I thought. I even put stretch goals in it and I was blowing past those stretch goals. So it's amazing just as a sense of accomplishment, if nothing else, for yourself to say, wow, I can't believe how far I've come, because in the day-to-day grind, you sometimes need that positive reinforcement. Number 2 is a team. Always need a team. Real estate, people think, oh, real estate's the business. Quite honestly, it isn't. It's a people business, whether you want to believe it or not. The people are going to make or break you, and having a good team in place is really paramount for understanding and ensuring that your business is going to continue to thrive. And then the third one, I'll throw one of those out there, the mindset things for you.
Right.
Critical thought. I don't think enough people are using critical thought. Just look at the media and ask yourself, is this really true? And believe me, I don't have I kind of can't stand the blue or the red. So this is not a political rant by any means. What is the media telling you? And is there another side of the coin? Because I think as a society, we really need to start understanding and asking more questions and really digging with curiosity instead of just saying, oh, yeah, they believe this, or, I immediately just zoned out, right? I'm not going to listen to you because they believe this. They've discredited themselves. Well, why did they believe that? And so the same can be said with real estate. Look on the MLS. You can find deals on the MLS if you're looking with a different lens than anyone else is looking. That's how I've acquired some of my best deals, is when I'm looking at something differently than what other people are.
2026, what are you most excited about?
I'm not a big New Year's resolution guy. I'm a one where if it happens in May, I need to work on this. I'm going to start working on it. So I don't necessarily look at it as this is the year. It just kind of happens that way. So I would label this year as self-discovery and working on my subconscious to understand why I am behaving the way I behave, and are there any things I want to optimize for the future?
How are you working on subconscious?
I've bought this course with a doctor psychologist, and he's got a kind of like what is it, five, I don't know, I'd call them chapters or five portal things that you work through.
Mhm.
And he's got some homework to do on that. And it's been eye-opening. It really has. It brought out things childhood-wise that I never even thought about. And I don't even foresee to this day, but the way he was asking the questions to really think through, and it was more like, hey, what's the first thing that comes to your mind as you get in this situation? What is the first thing? And, it's like, why is this coming out? But speaking of critical thought, no one really talks about our nervous system
Right.
and how it behaves in a way that tries to protect ourselves. And if you're listening to it, it can sometimes, uh, we can skip over some things that we shouldn't be. So really being in total control of myself, my nervous system, and my brain.
Amazing. Matt, you ready for the final 3 questions?
Sure.
If you had one piece of advice for your 20-year-old self, what would it be?
Stop drinking.
2 books that changed your life.
I am halfway through one right now, and I'm already ready to say that it's changing the way I'm thinking. So I'll go with the easy one, Rich Dad, Poor Dad, Robert Kiyosaki collection. Another really good one that's not, I would call it like 1A, 1B, The Real Book on Real Estate by Robert Kiyosaki. It's like really thick. It's much thicker. But it goes through exactly how to start a real estate business. Like, it was a great Bible for that. So I'd lump those two together. And then the second one is Getting to Zero by Jason Gaddis. And it's all about conflict management. And it's really been an impactful book, especially for males, right? I think women are in touch with their emotions and feelings. Men want to solve problems. That's what we're really good at.
Right.
And I want to process on how to do that. And he's really providing great value through that book of a way to step by step. It's not manipulation per se. It's, my wife's reading it too. So we're on the same page. We're just going to be using the same things together.
Yeah.
On one another. And it's kind of like a conflict management. You can use this. It's not just with personal relationships. It could be business relationships, whatever, to really work through things. And I think that's certainly something that's valuable to anyone.
If you were cast away on an island for a year, you could only get 3 pieces of data about your business each and every month. What 3 things must you know every month to know how your business is running?
I think it all starts and stops with cash flow. I mean, that's the lifeblood of any business. I think if you're focusing on anything else and in sacrifice of cash flow, you're in trouble. So I would be looking at cash flow as the number one thing. 2 and 3, oh man, So that's something I'm working on as well. Instead of a scarcity mindset, having more of an abundance mindset. So my initial thought is expenses, and diving deeper into, revenue than expenses, obviously, is the equation for cash flow.
Right.
And saying, okay, what levers can I play with on the expense side or the revenue side? But that I feel is more of a scarcity mindset. So I'm going to flip it up and say, what are my revenues doing, and how can I change those? And then I would say the overall market as the third one, and understanding what kind of equity, because that will play into if you needed to loan stuff out or leverage something, you have that opportunity to grow.
And I've asked lots of questions. What's one question I did not ask that I should have asked?
That's the hardest question you've asked. How do I define success in this season of life?
I love it. Let's do it.
Okay. How I define success is I'm not worried about those three metrics on that island. I am more present with my family than I ever have been and continue to be. I am okay being I'm okay being status quo. I'm okay not growing. I am from a real estate perspective, if I will.
Have you always been that way? And if not, what did it take to get you to that spot?
I have not always been that way. I'm more of a go-getter, high performer. I will say I bought a package of 22 single-family houses in March of 2023. That's just saying that sounds insane. We have a team of people that helped with renovations. I thought we would maybe renovate 4 to 6 of them in 2023. We actually turned over 14 of them because tenants were moving out, and that was all right. Like we were getting the tenants we wanted in place, and some of them needed some work, and I kind of got burnt out from it, quite frankly. I got tired of it. So 2024, I said, what am I doing this for, and why? And back to my business plan, I was doing it for financial freedom. Okay. I left corporate America or to your point, got left by them in 2016. What have I been doing for those last 7 years? Why am I doing this? So let's not have life pass me by, because I did in 2025. I turned 40. You can claim that was a pinnacle for me. I'm not going through a midlife crisis. I don't believe. I think it's just a season of life where I have a son growing up, and I've heard a lot on podcasts. He's 7. I have 11 more summers with him. That hit me. It's like, holy cow, right? Having those kind of, having that kind of awareness really has helped me understand what is valuable to me. Is it to brag about having 100 units, 1,000 units? No, I'm just a humble corn-fed millionaire that isn't going to be a billionaire. My son actually said, you need to write the book Cornfed Millionaire as a sequel. I said, I'm not going that far.
Matt, it's been a wonderful conversation. I appreciate you taking the time and sharing so much. For people who want to find you, follow you, connect with you, where can they go, or what should they do?
Yeah, I appreciate the conversation. It's been impactful and deep. I much prefer this over surface level conversation. So thank you, Neil. My website is the easiest way to get a hold of me. Investor Edge, RE, stands for real estate.com. That's my brokerage website. On there, I have a link to my Cornfed Millionaire book. You can buy that on Amazon or any of the audio book channels. It's in audio form too, because that's the way I consume books. Might as well let everyone else consume it that way too. So thank you so much, Neil.
It's a pleasure to have you here, and the links will be below in the show notes for everybody. Thanks, Matt.
Thanks.
Thanks for listening. If you're enjoying the show, may I ask a favor of you?
Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.